Welcome to the NWR Resources Virtual Series. My name is Kerry Stevenson, and next up we have WA Kaolin, the ASX code, which is the best ASX code that I've seen for a while, WAK, W-A-K. Now, WA Kaolin, they've got a wholly owned project over in WA. It's called the Wickepin Kaolin Project, and it contains a current mineral resource of 644.5 million tonnes of high-grade premium kaolinised granite. And it's only 220 kilometres southeast of Perth. To tell this great, exciting story, please welcome Andrew Sorensen, the CEO. Andrew, over to you to tell the WA Kaolin story, which sounds really interesting.
Oh, thanks very much, Kerry. I'm glad to be here presenting today. I'd just like to take the opportunity to introduce the viewers to our business, WA Kaolin. As an overview, I think the most important thing about kaolin is, while it's not well understood, there is favourable dynamics in the market at the moment, in that demand is exceeding supply and we're seeing prices appreciate, which is very good market for us to be in. As Kerry mentioned in the introduction, we have a very large resource in WA. It's got a 31-year mine life with mineral resources of 640 million tonnes and an ore reserve estimate of 30.5 million tonnes. We've owned the tenements for some time after buying them from Rio Tinto, and we invested quite a bit of our own money in getting the company to this point. We listed on the stock exchange in November last year, and we did an IPO raising $22 million. Over the journey, we've developed a proprietary process. We call it the K99 process, which is a low-cost production of kaolin compared to our competitors. And also, the journey has allowed us to sign up customers. We have one on a offtake agreement, and we have others on letters of intent. And the sum total of all of those add up to 83% of our production for the first 3 years. Kaolin is a very simple mining operation. There's no drill and blast. It's very close to the surface. We have about 3 to 5 metres of overburden, and then it's free digging from there to remove the kaolin. It's a very friable material, so it's about as simple mining as you can get. And we did a DFS ahead of listing on the stock exchange, and that had very compelling outcomes. 257 million with an IRR of 47%. What really attracted us to the business, it's a low capex business. So as I mentioned, we raised $22 million in November, and we're spending $18 million of that constructing the first stage production out at Wickepin. And then subsequent increases in production will be low capex as well. That allows us to grow the business and still pay dividends to shareholders. The stage ramp up begins with the production module that we're building right now, and that'll be going into commissioning at the end of this year and production in the first quarter of next year. And we've assembled a great team to oversee this project and deliver it. Talking about kaolin, those who don't understand or know much about kaolin, it's a white clay. It's used predominantly in the ceramics industry, the fiberglass industry, paper and packaging. It's also used in things like plastics, rubber, pharmaceuticals, cosmetics, concrete and agriculture. So it's a very widely used material, but little known. And there's also emerging uses of kaolin, which one of those is to produce high purity alumina. And there's a few of the participants on the ASX who are looking at using kaolin for production of HPA. We as a company aren't investigating that at the moment. We're following the traditional kaolin markets, which we think they're very compelling in and of themselves. But should HPA turn out to be a big success in the market, we're ideally placed to follow in and produce the HPA because of the feedstock we have is eminently suitable for that application. Just looking at the kaolin market, as you can see on the left-hand side, it's dominated by the paper, ceramics, and paint and coatings and fiberglass. markets. And if you look on the left-hand side, you can see Asia Pacific is the biggest and fastest growing market in the world at $1.7 billion per year, US dollars. I'll just talk a little bit about the project now. And as Kerry mentioned, we're very close to Perth. That's about a 2.5-hour drive, or 220 kilometres to Wickepin. We also have a portside processing plant in Kwinana. This is where our pilot plant is located, and our corporate office. This is an area that we've owned since the mid-2000s. And when you look at the location out at Wickepin, it's ideal not only for its location to Perth, but it also has access to the ports of Bunbury and the ports of Albany and Esperance, as well as Perth Port. So we have choices of ports to use for our exports. If you look at the tenement graph, which is on the right-hand side there with the yellow background, we have extensive tenements near Wickepin. There's 996 hectares of a mining tenement, which we're currently mining and producing products from. That's the green box you can see there. And then the grey boxes that surround it are retention tenements. And we have 9,000 hectares of retention tenements, which are reserved for future mining. I just wanted to put into perspective the size of the resource that we have. Imerys is the largest kaolin producer in the world. They hold about a 16% market share. When you add their reserves and resources globally together, they have 151 million tonnes of kaolin. When you look at our resource, our reserves and resources of kaolin added together is 270 million tonnes. So it's a very significant globally sized operation. Talking about our stage ramp up, and this is key for managing our cash flow and the capex of the business. So we currently operate a plant at about 5 tonnes an hour in Kwinana, and that's been running non-stop since 2016, producing, originally producing samples for approval by the market and to generate those offtakes. But subsequently, we've been running that 5 days a week, 16 hours a day, just filling orders for customers as we've trying to satisfy that demand that we've created. We're over halfway through constructing the first commercial scale plant at Wickepin. That's 25 tonnes per hour capacity, and that will give us 200,000 tonnes of volume per annum. The improved logistics of shipping the product to the port rather than the ore to our pilot plant, and then from the pilot plant to the port, there's significant savings in what we're doing now based on that alone. Then what we will do, we'll cookie cutter that process, and we'll add another 25 tonnes per hour capacity, taking our production capacity out to 400,000 tonnes a year. And we're planning to do that within 3 years. And then after that, we can implement further increases to capacity, or we can move into the wet processing process to add that capacity as well. And that will happen in the 5+ years time frame. So here's a picture of the design that we did for the production facility, and then the actual production facility photo taken from a drone footage a month or so ago. We've signed a 15-year LNG supply agreement because our process is a dry process. We have to dry the ore before treating it, and we use a large gas-fired kiln for that. So having the gas supply contract locked away is very important for us. We also have the water supply agreement with Water Corp signed and executed. And we also have electricity generators that have been delivered to site and are in the process of being installed. So that sort of rounds out the whole package of utilities for the site. And we're producing on time, on budget for this production facility. Just a few more photos, a different angle there of the facility. It's quite a large facility. It's about 18 metres tall in the tall section there, 170 metres long by about 100 metres wide. So it's a very significant facility. You really can't sort of get the scale of it too well from that photo, but it's a very big photo, a very big facility. And on the right-hand side, that's our pit. As you can see, we had some visitors there sort of between mining campaigns just to inspect the pit, and you can see it's a very white, bright, large resource. This is our stage 1 project program, and as you can see, we're right in the thick of the installation of all the packages, and commissioning has started to commence and will continue through to the first quarter of 2021. The existing customers we have are really important, because with an industrial mineral, it's all about your customers. Without your customers, you don't have a business. So we've spent a lot of time and effort, getting these customers and bringing them on board, so that when the capacity comes on stream, we have those people lined up and waiting. And we've got customers in China, Taiwan, Japan, Australia, Vietnam, plus other countries. And we're also in the verticals that we want to be in the fiberglass, ceramics, paint and coatings, building products, cosmetics, and what have you. So I think that's a real strong suit for our business, in that we've done the homework, we've done the hard yards, we've produced the samples, we've curated this group of premium tier 1 customers ready to take the material from our plant. Just a quick snapshot of our corporate overview. Our top 20 shareholders hold 67% of the stock. Owners and board are 38% of the stock, and we have just under 1,500 shareholders as we speak. There's 282 million shares on offer, on issue, I should say, and the market cap is 58 million. This is the team that we've put together. John White is our chairman. He's a very experienced businessman and is really valuable in steering our company. He's got a very broad CV. I guess he was the global chief executive of the Visy Group for the Pratts, so a very experienced and accomplished manager. Myself, I've had 30 years experience in the industrial minerals sector. Alf Baker, he's one of the founding partners. He currently holds just under 18% of the stock, and he's had a long successful history in the industrial mineral space, developing a number of unique and patented devices in his electrical business, and successfully developed industrial mineral businesses before that. We have a couple of non-execs in Linton Putland and Kathy Moises. Linton is a mining engineer and brings a wealth of experience from both in Australia and overseas mining operations. And Kathy was the head of research for Patterson Securities, who originally covered our business before the IPO, and she liked what she saw, and we were able to attract her on board as well, and she's a very capable non-exec. And our Michael Kenyon is our CFO and company secretary. I'd like to say he's a safe set of hands. He's taken on this role for many other companies, and he really is an excellent asset to our business. I'll just finish up by talking about the DFS in a little bit more detail. The DFS was based on both the stage 1 and stage 2 ramp-ups. So that's out to 400,000 tonnes over the first 3 years. And there's obviously significant scope to increase it beyond that, but this DFS only focuses on those first 2. And as I mentioned in the introduction, has an NPV of 257 million and an internal rate of return of 47%. It's a very strong outcome, and when you have a copy of this is on our website for those who wanted to look at the detail. It's a very compelling picture, and some of the headline numbers is $1.2 billion of sales over the journey, an average selling price of Australian dollars $321 a tonne. and an EBITDA of 350 million generated over the journey. This is the disclaimer. I'll allow you to read that at your leisure, and I'll be happy to take any questions.
Sorry, Andrew, I muted myself so that I made sure I didn't interrupt you. Really interesting presentation, Andrew, and what a fantastic project. I think you said rarely do these projects occur in large, high-grade, low impurity. That's what you've got. I'm curious about the K99 process. That's proprietary to yourself. Would you ever look at potentially, I guess, licensing that out to other, or do you say, no, that gives us our unique selling point?
Look, I think it's more of the latter. The K99 process was designed around our resource, so it would not necessarily be led to a less pure resource. We're very lucky in that we have very high purity resource with low iron, low titanium, so we don't have to chemically bleach or wash or all of those things that our competitors do. There is no chemicals added to the process of purely a physical separation. So, and we can do that because our process is, our resource is so pure, and that's what gives us the low cost position. So I don't think that it would be easily applicable to a resource, typical resource which has less, which has higher levels of impurities.
So all the upside to you, which is great. Questions coming in. Can we expect first production in December? Is the first one. Okay,
so we're not expecting first production in December. We're commissioning during the last quarter, and that commissioning will continue into the first quarter. So production, commercial production will come out of the plant in the first quarter of 2022.
Will the options be listed?
Options are not listed, no.
No. Okay, so I'm going to ask, what is your goal to strengthen, I guess, the share value? The share price has been fairly, I guess, consistent for a little while now. But to me, I'm looking at thinking, this has got, you are getting close to production. All the metrics stand up. The numbers look good. Do you think that the market just hasn't recognized how good this project is? Because I'm looking at it from an investor point of view, thinking this has got, you've ticked all the boxes pretty much.
Yeah, well, we certainly believe so. And in as far as I don't know too much why the share market hasn't appreciated what we've got to offer, but I'm certain that the proof will be in the eating of the pudding, in that when we hit production and we see those cash flows coming through the business, nobody will be able to ignore us. And I see the share price, performing very strongly. The closer we get to that production, I think the stronger the share price will be.
And when are you expecting that production to come on stream, Andrew?
As I mentioned, it'll be the first quarter of 2022, and right now I'm picking sometime in February.
Wow. Okay, so that's, I would suggest that that's going to be a big catalyst. And how soon do you think that, I love saying it, whack, we'll be looking at distributing dividends going forward? Because you did mention dividends earlier. I
certainly did. Yeah, we have a dividend policy of paying out 66% of profits as soon as we have a surplus cash, and we're picking that'll be 2 years after, within 2 years of having first production.
Last question before we're going to have to wrap it up is, have you managed to get a better selling prices in this climate, and have any of the costs increased?
I think the key message there at what's happening right now is the shipping prices. Yeah. So with a commodity of $300 a ton, and you've got $80 a ton in basically shipping costs, it has a big impact on the cost, and it's affecting all of the producers. So we have the bulk of our selling contracts are on an FOB basis. So the receiver pays for the freight. So as the freight goes up and down, their costs go up and down, ours don't. And those customers that we sell on a CIF basis, where we ratchet up the prices every quarter as we get the pricing from our shipping company. So we quote quarterly based on the shipping quotes that we get. And each one of those quarters where we've had to ratchet up the CIF price, the customers have come on board and stayed on board. They've not moved away because of that price, because that's what's happening globally. And in fact, the shipping price from Australia into Asia has gone up less than the shipping price from, say, Europe or the US. So it's actually making us more competitive against those European and US based competitors.
Well, Andrew, I certainly think you've got a fantastic project there. Congratulations on all the milestones. Loving that K99 process. Thank you so much for joining us at the NWR Resources Virtual Conference.
Thanks, Gary.